Howdy! How's everyone doing? See if we've got any excitement going to happen in the markets. It's been brutal. It's good I can see ICT's live. Good for him. Let me know how your session's been, what's been happening. Hey buddy, yes, how's it going, dude? What's occurring? Gonna run over a couple of things that happened today in the session. Absolutely brutal session today. Not brutal in terms of the flow, just uh, uh it just wouldn't go, to be honest with you. Um, the whole session, if we run through the tens here, we just didn't go open, faffed around. We caught this sell off. So the play that we actually discussed this in the stream last night, where we were planning on these single prints being filled out and basically going right back down to this high volume node here. This has literally happened exactly, right? However, um, it wasn't very clean, to be honest. So if we look at the time here of this, right? So obviously before open, this is UK time. So let me just this candle here. How do I get a line here? Right. In fact, do you know what I need? The pen. That's what I need. Give me a second to bring up the pen. That's what I need. Dynamite, how's it going? Yeah, I'm good, dude. I'm good. I had a pretty good day, to be honest. Like not a scratch day today, but otherwise a pretty decent day. Um, so let me just work this out again. Sorry. So this candle here was the open, right? So let's mark that. So here's the open this candle, right? Um, so this candle here is the open. So my plan that I'd essentially had drawn up was yesterday was we were going to do something like this. So overnight session, we did this, and then we would sort of faff around, and then we would dump down, which in essence has happened, right? So we're correcting an analysis. But the right play was I was basically short here. I was short here. It's hard to show this in DOM because this is live at the moment. You're obviously not going to see this, so I'm trying to explain it. Can you guys see this okay, or does it make sense if I blow this up a little bit for you? Nico, buddy boy, how's it going? What's happening, dude? So basically, I was short in here. I was short my full clip as well, and I was thinking, right, we're at open, there's some volume happening, we're going to bang it, there's some stops are going to trigger from all of this, right? And then we're basically going to have this move, and we're basically going to work our way down here, and I'm going to have a great day, and life is going to be simple, and I can be out this trade in like 20-30 minutes, and, happy days, right? However, it didn't, and then we had this ridiculous chop that basically happened. So we then faffed around. So we didn't. We then come back up. Each candle you're seeing here is 15 minutes, and then I caught the sell off where this happened. Someone stepped in. I think it was exactly at 28, if I remember correctly. Someone came in at this level here, and I basically got out. I think it was like a seven or eight tick winner. So it was a really good trade. Then we went back up, and then the bond auction happened, and I was basically I was offering the retrace on the bond auction here to basically go down, and I think we took 2 or 3 ticks, and that was pretty much it. We took a couple of trades on the 30 years today, but kind of rubbish action, to be honest. The book was extremely thick, so you can notice here. I mean, all this wasn't here. So if we, you know, forget this wasn't here, right? We'll pretend with the drawing here, right? So this wasn't here at the time, and we were basically this was it, right? We were in like a 7 or 8 tick range for hours, and I was losing the will to live because I'm thinking, right, we're short full clip here. We're looking for this to basically break down. It broke by 3 or 4 ticks, and then literally just went right back into the highs. Consolidated, faffed around for another hour or so, and then we had this sell off at the left here. So that was pretty much it. That's the whole day in Treasuries today. Did you guys take any trades today? We'll jump into indices in a second to see what's happening. Yes, Wayne Dynamite, are you chaps new? Are you new to OrderFlow? So what we'll do here is let's just open. So the 30 year again pretty much did the exact same. So you're new. So can you explain why you have 3 different DOMs? Okay, that's a good question. Let me answer that. Well, the fives is really going here, isn't it? Holy smokes. So pretty much the reason why I have 5 depth of market, not five, sorry. The reason why I have 3 depth of markets, and I also have the ultra here. You can see when I have that up when I'm not streaming because it's too much for you guys to see all in once. So in order flow trading, correlations are extremely important, right? Extremely important. Specifically in treasuries. So I mainly trade thicker markets such as treasuries. I prefer ES when it's a bit thicker. It is the last thing. We're going to jump into indices, right? And it's actually quite a good segue because you'll see just look how thick this book is. Let me get the pen. So you can see here that there's thousands of contracts waiting each price, right? You can see that here, thousands of contracts that are waiting. So the 10-year notes or the ZN contract, right, which mirrors the 10-year yield. Okay, they move inverse to each other. This is the most liquid product probably in the whole of futures by a mile, to be honest. It's the benchmark for basically mortgages, to be honest. If you're wondering why that's the case, it's basically the benchmark for there these days. Um, and and typically correlations are extremely important, right? So like in indices where you've got ES is correlated to NQ, and then you've got the Russell and you've got the Dow in there. Correlations are extremely important, right? Treasuries is no different. So what you're looking at is we have basically the short, middle, and long end of the curve. This is the 5 year. This is the 10 year. Okay, I'll draw this out. This is the 10. God, I am woeful at this drawing. This is the 10. This is the 5. This is the 30. Okay. I my main product that I trade is the 10s. Sometimes if I'm feeling a little bit more frisky, and I'll trade the 30. So what you're seeing here, this is the 10. This is just a standard chart of the 10s with some volume profile and delta. You can see how much delta is coming in at the moment. And this is a TPO chart or market profile that you're seeing. Okay, this is the whole of today's session. Today, including the overnight session. Okay, and very typically, Do you see how correlated they are right now? Okay, so they're all going up in essence, right? So there's a chance that that's going to continue. You know, very typically, if you're going to be taking a breakout trade, you want to see all of the markets doing the same thing, and that's why I have three depth of markets up. Probably something for me to note actually with I'm going to review this trade later here. And if I remember correctly, the 30 year was kind of bobbing around this area when we actually took this low here, the second attempt here, right, this area. Um, the 30 year was actually working its way down to the lows as well. So correlations are extremely important, which is why there's three depth of markets up. Hey, Fortune, how's it going, dude? What is happening? How are you doing? And normally I finish trading about 1 p.m. US time typically because treasuries don't really tend to move and there's not really a lot of two-way, to be honest. We're seeing a real big bid. To be honest with you, now that we've filled out these singles here, Friday singles, you can see this all the way down, single prints. My term now is I'm really hoping that we basically just go bid for the rest of this week. That would make my life really simple if that was going to be the case. Yeah, that's true. That's true. The hard thing I was going to say about crypto, if you're day trading that, is it's hard to get centralized data because you have to get a platform that can get the data from Binance, Bitfinex, HitBTC, Kraken, you know, Coinbase. Do you know what I mean? That's the hard thing about that. Whereas what you're seeing right now, I'm in the UK, you can be in the US or India, and we would see if we have the same charts and the same data, we would be seeing the exact same thing. So it's centralized, which is extremely important, and it's much easier to learn, I think, as well. There's not as much, well, there is spoofing, but not as it's not as manipulated as crypto, I would say. Daniel, how's it going, dude? What is happening? So I think that's enough about treasuries. I think you guys will be bored out your marbles if I continue on with treasuries. So let's open indices and see what is happening. I'm gonna close treasuries a second. I'm gonna save all in case I've done anything on there that I wanted to save. Close. There we go. Oh, I didn't save that last time. No. Okay, let's change that. Studies here, blocks here. There we go. This will be easier for everyone to see. Okay. Let's put this into its own profile. Okay, so we're really selling off. Let me quickly catch up, see what's happening here. Okay, so this has been a huge range today. Wow. Okay, so this is yesterday's close. Overnight session extremely net long, and then we have the standard correction on overnight, and then we're just about to sweep the overnight low. Let's see if they correct back in. Delta wise, let's have a look at that very quickly. So if you want me to run through what you're seeing here, same sort of idea. This is a TPO chart. This is a Heikin-Ashi chart, which takes away some of the noise. This is cumulative delta. This is the regular trading hours volume profile. This is the evening session. This is ES. This is NQ. This is the Russell, and this is the Dow. that you're looking at. Let's get rid of these lines. I think they're from a previous session. So let's have a quick look at this. If we draw this out, scroll one back. Okay. So we're 6,000 positive delta still in the day today. Interesting. So below this level, tons of stops, right? If we get this far, so they need to initially bang it through overnight low here. Alex, how's it going? Jamesy boy, what's happening, dude? I'm feeling a little bit of a fade back in potentially, but this is a huge range today, man. Huge range. This is actually a. If I was this day here is like a great day. You know, huge range, extremely net long overnight. You know, we open, we basically sweep above previous day high, and then we just dump for the session. Really good one, and now we're sweeping overnight low. So if we have a look here, we can see that literally this price. So let's get a rectangle so I can mark it out. So roughly this price here is basically where the most volume has been spent and time that was spent in this sort of evens 20s range. So we'll see what's going to happen right now. If this is to continue, bearish, there's going to be tons of stops below 20s here. Here you can see. So that's pretty much, I think, what the play is going to be. Is we in essence sweep below here, and then revert back into the mean. I don't think on a day like Tuesday, no news. You know, we're going to just absolutely bust through the lows. Did you take that trade, James? That was a good one, to be honest. Actually, you know, kind of wish I had a look at ES today. That's an absolutely classic textbook sweep, and then just sell off, to be honest. There's still a lot of pain that can happen here, you know, just so we're all aware. You know, the market is not out of the woods yet. We had a really, really scary Monday session. Tuesday, we essentially did a bit of a regain, and then we took it all back. Overnight has been extremely net long. We've again took that back. So Thursday and Friday, if we take out these lows again, there's going to be more pain, to be honest. But most likely this session, I think we sort of work our way back in and sort of balance round about evens, maybe 90s, 80s or something. You did nice. Rafa, dead cat bounce. Piggy boy, yeah, I've had the last 2 days. I might as well have just not even bothered. To be honest, I've had 2 scratch days in a row. The action has been, like we discussed in the start of the video, it's been. I wouldn't even say that my execution was off either. It was just it was so grindy, you know. Like every single time it tried to break the lows, there was just someone there, and it was even, you know, right at open as well. The moves seemed to be happening about 11ish in the morning, give or take. Chad, how's it going, dude? Yeah, exactly. Exactly, mate. That's the thing. You kind of need to, you know, I'm guilty of, just saying, we'll take it now and then we'll manage it, you know. This actually looks a lot better and easier to see with the blocks, doesn't it, rather than the letters, and it's easier to scale on Sierra as well. Chad, did you take any trades today, dude? What's happening? You guys can hit the like button for me, please. There's 24 of you lovely people watching and only 9 likes. So let's get that to as close to parity as we can, please. Much obliged. Thank you, thank you. You did. You actually caught some of the sell-off. Too right you did, mate. Too right you did. Yeah. As I was saying, I still don't think we're out the woods yet. To be honest, I think we'll probably end in balance today. But if we take out these lows, then there's going to be a lot of pain. I need to check the calendar for Thursday and Friday, see what's happening. No, I separate them out, James. So for the current day's session, like the current day, I keep the overnight session in there, and then after, like when tomorrow comes, it basically deletes the previous day overnight. So what you're seeing here on ES, this is just the regular trading hours on TPO. Um, here. Let me get this arrow. So this is the just the regular trading hours for Tuesday, and this is the regular trading hours from Monday. So we've got the overnight in here, and then when tomorrow comes, it'll just have the regular trading hours. I just like to only really reference when it comes to for the current day session. I like to pay attention to where the overnight high and overnight low is, because they love to get swept areas, and there's typically stops in there. Um, But then when it comes to referencing inflection points, I like to look at the previous day high and previous day low. Um, it typically takes into account the regular trading hours. Yeah, how's it going, mate? Um, yeah, it's always a nightmare. It's like the trader's curse, isn't it? Where you kind of get a bit of a rubbish entry, and then you take heat on it, a little bit of pressure, and then it comes back, and then you kind of use your mental capital, in the heat, and then when it comes back, you're like, oh, I don't really want to take a loss now, and then you end up mismanaging it. It's really common. I actually think that you make money with your entries, to be honest. Um, it's easier said than done. Everyone does that. Everyone does. I pretty much did the same thing today on treasuries, but I held one a little bit too long. The trade actually happened, and it was just enough to get back to scratch today. Gotcha. You're new to Treasuries and not sure when the volume comes in. James, where are you based? Dude? Are you based in the UK? That's a very British name, so I'm assuming so, dude. Biggest trade beer drunk. Why bother about stop losses when you're 6 beers deep? Exactly. That's the way to do it. Every time you enter a trade, take a shot. Brazil. Wow. I was so far off from that, mate. Are you trolling me? Or are you generally from Brazil? Oh, you're American. Okay, I wasn't even close. Anyway, you're 8:30. I can go with 8:20 to be honest, but typically, oh, sorry, typically 8:20, 8:30 a.m. is when the volume, New York time, is when the volume comes in treasuries. Very sometimes maybe an hour before open they'll maybe bang it, but they'll maybe give it a breakout or something. But generally speaking, before that, breakouts don't really happen. Yeah, exactly. I think the thing is, with these guys don't actually trade. They basically quote bids and offers. They'll get a large fund will call them up and they'll be like, hey, I want to sell 10,000 10 T notes or whatever, and they'll quote them a price, close them a deal, try and literally finagle them on a couple of ticks or whatever, and then literally the how would we call it? I'm just for simplicity going to call it the inventory team. Uh, will have basically said, right, today we've got an exposure of 10,000 or whatever the number is, and they then decide if they want to basically close off some of their inventory or start hedging it. So a lot of these guys are just there. It's just sales, you know, with a little bit of market context thrown in. But a lot of these guys that are doing that, they're not essentially trading. Don't get me wrong, there is trades that are get executed, but it's not them that's doing it. Yeah, exactly. They're just salesmen, and they do the same. They'll do the same on that on stock as well, and they won't be executing the trades in this day and age. Um, it'll be executed. It'll probably be put to their trading desk, and then the trading desk will ultimately execute the trades. Because a lot of these orders, when you're phoning, say you phone JP Morgan and you're like, hey JP, you get Bob on the phone. You're like, hey Bob, I've got you know thousands. I'll just pick a number, right? I've got 20,000 T notes to sell, right? So basically, he needs to then quote him a bid for that, so he can get out of the market. And obviously, this is done over the counter, right? He's not actually pressing buy or sell. And then JP Morgan, you know, already know that what the net long, net short exposure is, and they'll decide if they want to take on the position depending on where their average position is. And then they'll put it across the trading desk, and then they'll work out the position. That's pretty much how it'll be working. Yeah, so that moves the markets. That moves the markets in itself, right? Um, because this is the thing that there is tons of different. And people think about hedge funds and pension funds and market makers and stuff, but they all have, like, how to explain this? They're they're all operating in the market, but they're all doing slightly different things, right? Um, and basically, the investment banks is providing efficiency and liquidity in the markets to hedge funds and pension funds. Because a lot of the time, these big funds are looking to execute the strategy with the analysts. They don't have the infrastructure to be able to execute really complicated orders. Because say, for example, we'll just talk about money, right? Say, like, right, we want to put 10 million into S&P, right? Um, you can't just go to the market and and press buy, because you want to get filled at a good price. You want to maybe get filled off over multiple days as well. So you'll phone an investment bank and say, right, this is the plan of attack. This is the average price we ultimately want to pay, and then the team is basically given that those trades to execute pretty much. So on any given day, regardless of news that comes in, these trades will be coming in, you know, all the time. And that's why the market, nothing needs to be happening with the actual underlying stocks or happening in Apple or Meta or whatever. Nothing needs to happen in them. It's just that people close in open positions that needs liquidity. Now, your guess is as good as mine as to when that's coming in, but you need to understand that the order flow is in essence going to give you at least a gauge. It's much easier to spot that in treasuries, to be honest, because it's much thicker. When the market is like this, I mean, I think Daniel was in the stream yesterday and he was saying that the best bid and offer is higher. It's higher in cable and Eurodollar or the fiber than ES. I mean, it's crazy. It's such a thin market at the moment. It's completely changed. The markets go through different regimes. So, Dynamite, what is my average profit tick per trade? So it depends on the day, but typically if it's in a balanced day and I'm trading the 10-year, I'm going for 3-4 ticks. Okay, average hold time is about 12 minutes on that trade. Sometimes a lot quicker, just depends on the volatility, right? But that's the average. My exit is normally going to be the order flow, but as I said, today's trade would probably a good one to run through, where I was hoping we continued down, but someone basically stepped in and started absorbing all the selling. Like, you can see it. I mean, it's not like you're seeing ES when there's nothing trading. In in the 10-year, they were hitting into the bid, so they were selling in, right, and the market's going down, and it got to 28s, and they were hitting 4,000, 5,000 contracts into 28s, and the bids just kept on refreshing, right? So I'm like, oh well, okay, that shouldn't be happening. Do you know what I mean? And if that was to go down more, they would have hit 2k in there, and it would have went down the next price. Hit another 2k, it goes down. You know what I mean? If someone is stepping up and holding the market with 5,000 contracts, you don't really want to be going against that, to be honest. Do you know what I mean? So basically, the order flow gives you a gauge. Now, my honest opinion is if you're just starting out trading, you don't want to be doing anything complicated, such as dynamic risk, right? My advice to everyone is have a fixed order bracket, right? X amount of pips or ticks in a stop, and the same for the TP. Go for a minimum 1-to-1 and let your edge play out. Once you build up enough trades and you get proficient at what you're doing, then you can start, analyzing things more and working on your edge. But you need to first, you know, get yourself um, building enough sample first. Okay, you want me to reset the data, buddy boy? I will do that for you. I like your style. I like your style. Let me do it. So let's reset. There you go. Bada bing, bada boom. Okay, so thresholds when ES is like this. So we've basically got two plays just to discuss your fading back in here, right? So overnight low. So we've kind of got it down here. We've kind of swept it a little bit, right? So two options for the fade. We either sweep the level again, right? In general, I can't really see if I've actually swept overnight low. I don't think we have, to be honest. So you want to see a sweep of the overnight low and then reverse back into value. That's option one. Option two is if we bang it and then we get down, how many tickaroos are we from down here? So let's take current price to here. Jeez, man, it's 100 ticks away. That's a lot. So I don't know if that's going to be on the cards. The thresholds are much smaller as well. This is another thing you need to take into account because the market's thinner. When ES was God, it seems, a couple of weeks ago when it was like 100 at each price. Now it's 30% of that, to be honest. You'd probably need, I don't know, maybe a couple of thousand absorption. You maybe see. Now you're probably going to be looking at, something like 6 to 800 you can potentially see. But it all really depends. So I have a hard stop, right? I have a hard stop of 5. So that as soon as I'm in a trade, it basically places a hard stop. I would then look to ultimately manage that position as it goes. The sort of the 5 tickaroo hard stop is just in case I get into trade and something crazy happens. But I'm ultimately looking to manage that trade. And obviously before I get into the trade, I've got an idea of, right, am I willing to take a couple of ticks heat in this, or if I get in here and it doesn't do exactly what I'm expecting straight away, I'm out. Tens, yeah. Yeah. So how much of the markets do you think is paper? Do you think is paper trading? Because I would say a large percentage of retail want to props past. I mean, honest stance, retail. Like if you look at the commitment of traders report posted every Friday, I'll send you the data on that. Retail is so insignificant. It's not even a dot on the map. Do you know what I mean? It's so insignificant. Even before like props came in. To be honest with you, you've really got two main players. To be honest, we'll call them speculators. Your big funds. Well, that's not exactly the exact term. We'll call it investment banks, right? They're your sort of speculators in the market that have the speculative positions, right? And then you have the commercial side where they are, in gold. There may be for example, a gold mining company where they're hedging off and actually taking deliverables of the product. If it's oil, it's BP, so they're hedging things off. That's commercial. So they actually are hedging off their margins against the deliverable product. That's a big part of the market, especially in futures. But they're all correlated, of course. The one thing I would say is good about oil is it doesn't have all the crazy correlations, you know, the indices and treasuries has. It's kind of a little bit more simple there. Yeah, dude, so there is a playlist in this. Let me just put it in the chat for you, my man. Copy. There it is. So work your way through this playlist, mate. There you go. Hours of content on there. You can work your way through it, dude. The objective of that is, you know, you learn what the DOM is, you learn the competition, you understand what delta is, where traders can be trapped. You know, we've got loads and loads of hours of content in there, and it's forever growing, to be honest. So if anyone's got anything that they want to see, we've got volume profile, rotations, you know, loads of things in there. Loads of stuff. And also say thanks to Cammy as well, dude. He's one of the boys. I hope I win the lottery too, JK. That's for sure. To be honest with you, the same thing is if I actually won the lottery, I would still be trading. That's when you know you're an addict. And honest as well, mate. The ICT stuff as well. You know, take some of the concepts, maybe add an order flow, or if you want to move away from it completely, it just really depends. You know, but the thing is with this style is you need to go in with a completely open mind because it's actually I would say if people have been trading for 2 to 3 years and they learn tons of habits and they strategy hop, you learn a lot of bad behaviors, and then it's hard to unsee those things, you know, because you constantly then have these sort of contradicting beliefs all the time. That's you know, um, so yeah. But take your time with it all, mate. Rome wasn't built in a day. Good question, mate. So, like always, you need to do your sort of pre-market analysis to have a rough idea of where you're in. You know, for example, yesterday we discussed that those single prints were going to be filled out on the tens. So that was roughly the plan of attack for today, and then you need the order flow to basically be supporting your theory, right? And you need to also factor in things like there's no news today, so you better believe that there's going to be no movement really before the open. Um, you know, you need to wait till some volume comes in to actually get a breakout to happen. So when it comes to the depth of market, you're using that for correlations, spotting absorption, spotting sweeps, seeing any icebergs or when large players are coming in, and then you're executing. And then you're executing, man. This thing is going. Okay, we just broke below the overnight low, as far as I'm aware. Let's see if we sweep a root and then reverse back in. Look at the amount of selling that come in here. So Dynamite, I use Denali data feeds, and then I use two routing. I use Teton and I use RTrader. You can run multiple instances of Sierra, but I would recommend getting Denali data feed. I have package 12 with MBO data that allows me to see the large orders you're seeing on the clip. These. Now this is fake. It's the algo cloud that we've been discussing. ES at the moment, by the way, we're in summer months. Volume is lighter. There's no liquidity there. You know, this is a really rubbish time to be trading. ES. I mean, this is probably the worst I've seen ES, if I'm honest. Hence why Treasury is the way to go. I mean, I'm slightly biased in that way, where I prefer the market to be thicker because it's easier to read. Hey, Pikey boy, how's it going, dude? How's it going, matey? Yeah, so key level right now, if we can, we've got Tuesday's low coming up. Let's actually mark that if we can get there. That's quite an important point. 22s, so let's mark a roo if we get that far. I think we're probably going to end in balance today. I think that's most likely what's going to happen. But we'll see. Previous day low here. Let's note this was a large, and we'll make it red for delta. And then let's clear. Yes. Nice. Nice, Piggy boy. Yeah, we'll see if we can basically sweep this out. So they're definitely not out of the woods yet. Only 2 lines have maintained my charts for longer a day. Nice. Volume's extremely important, you know, and this is the thing. You kind of don't be mistaken between a thin book being good volatility or good volume. It's not the case. Like, you need good volume to come in, directional volume, you know, correlations to be in your favor. That's where there's luck in trading, right? Or I call it variance. Very similar to poker. You know, where you get in with a very good hand, very good position, and sadly you just take a bad beat. That's just how it works. That's how variance works. And in trading, when you are anticipating a break of a low for a breakout to happen, and it's in the right conditions, and it only goes like 3 ticks, for example, right? And then it comes back and you end up needing to scratch, right? On another day, that will go for 10. But that's just variance. Because you are literally relying on someone with far more money than you to step in and buy that market higher, or more people to cover their other side of the trade so that the market goes higher again. You know? Because you guys understand that as well, right? If you're buying a high, you've got 2 participants coming in. You've got people that are buying the breakout along with you, and you've got sellers that are also buying because they need to cover, which also drives the market up, right? And they come in as market orders, which takes out the offers on the other end. And sometimes you'll have lots of stop orders trigger, and sometimes you'll have more people buying the breakout with you. Sometimes it goes, sometimes it doesn't. But you need to be quick to puke it. That's the thing. We'll see here. I mean, I wouldn't really like to continue the pressure. I would like to see 37s hold. See a little bit of absorption. 437s. See if they crack it. There's an iceberg there at 37s. Ticked off it again. Clear as day absorption there, right? You guys can all see that. There was only 20 in the bid, but someone has basically iceberged that, which means they continually refresh. Market's ticked right off it. So in theory, for this to continue down for the short, you really don't want to see it break maybe like a point above 37s. So there's your cheap trade for the short side. This is actually a great example of it, of absorption right there. Even in a thinner market, you can still see it. And we'll watch and see if it does break above there. You'll probably see a little pop that will come above 37s because there will be some stops above here. Nice. Did you see a little pop there? I looked away for a second and we're above 37s. I missed that. Did we have a stop run above that? Did you guys catch that? The difference in absorption and iceberg. So an iceberg is in essence someone that's showing. So how do I explain this? So an iceberg is, say price get like it got to 37s, right, and there was only 30 showing on the offer, right, but when buyers went to buy through that offer, right, the offer kept on refreshing and adding on more contracts. So it went from 30 to 40 to 50 to 60, until we got to, for example, 715, just as an example, right? And that's essentially what an iceberg is. That's a large player. There's no retail investor that's using an iceberg order, that's for sure. They'll typically be done via an API or some form of automation to get that in, and it'll be looking something like, once 30 triggers, on this price, then continually reload till X amount of contracts is traded. Now, icebergs don't always hold. It's not just because you see an iceberg come in, you trade solely off that. It doesn't work like that. And then absorption is part of that. It's part of the sort of whole sort of picture on, can price get through that level, for example. Now, when the market is thinner like this, it's hard because you need to adjust your thresholds for this, because obviously a thinner market is not going to take as much money to blow through levels. Haha, look at that, Becky boy. Titanic hit an iceberg and the sea absorbed it. That's a cracker. That's a cracker. I like that. We'll see. So at the moment, we look to be calming down a little bit on the sell side. To be honest, we can see from Delta here that it's kind of flat. If anything, there's a little bit more buying that's coming in. So I still think we do end in balance for this session, and then see if Thursday, Friday, if there's any data coming out where we can basically probe these lows. You watched Titanic? I've not watched that in years. We'll zoom in a little bit so you can see it a bit more. So the two key inflection points is overnight low where we've swept it, and then previous day low. It is very scary price action to be fading here, just because it's completely straight line down. And I prefer when a market goes aggressively into a level rather than it just doing this grind of death down, hugging the 4 standard deviation band. It's never great. I would rather to see it, with it just like a huge big candle that comes down, loads of volume coming in, it comes aggressively into the level. That tends to work a bit better. Peg, initial jobs claims, wholesale inventories, and Tom Barkin speaks. No use schedule for Friday. Okay, so a quiet Friday. Thursday's the fireworks then. It was a great explanation. Really appreciate it. No problem, dudes. Pig. It's a pretty dark way to look at it. Kieran, so footprint charts. Another way to look at the market. Um, Footprint charts, of course, you're only seeing market orders. And how I really have always used footprint charts is just to see imbalances. Um, and I think footprint charts work great in hindsight. Um, definitely use them where if you see, I don't know, the market breaks a low, and there's a huge selling imbalance with that, right? You can set the imbalances, 200-300% sell imbalance. Market comes back up to retest that, you can see the imbalance, stacked imbalances around that level, and then you want to see the offer being absorbed there, and then continue selling in. The reason I don't is because I've been using the DOM, and I like to keep it a little bit, you know, the depth of market is basically everything combined. So if you get efficient with the DOM, that's in essence everything combined, right? You never seen the Titanic? Yeah, they'll be calling me Mr. OnlyFans soon enough. Yeah, there's loads. The thing is, I think really when it boils down to it, um, really want to know what volume's coming into the market. Typically, the market moves from a place where loads of money is spent to another place where loads of money is. And typically the market will blow through areas where not a lot of money is spent. That's where not a lot of money is spent is basically a low volume node, and where loads of money is spent is a high volume node, very simply. And when the market blows out of a high volume node and then goes into a low volume, so it blows out of a high volume node and it's through a low volume node, you then essentially leave an imbalance, and that's the standard way if you ever look at charts where you would see the classic break and retest of that level. But then when it comes to the retest of that level, order flow allows you to actually see if that level is holding. Like you can actually see, right, it's retesting, say, um, the break of previous day low or something, and then you can actually see the offer stepping up and absorbing the buying to continue down. And that's the general theory where why certain support and resistance levels hold or whatever, right? There's a reason for that. Yeah, it's absolutely pumping now back into value. Though we were saying we expected to go into value, it's when the market's really thin like this, it's hard to get an entry. That's the thing. Like that in my opinion is what's really difficult about um, a thinner book. It's hard to get an entry. I personally find it a lot easier when it's more condensed into smaller ticks. It's easier for a human. It's hard though, but as we're saying, the general sort of idea is we maybe work our way back. Maybe to the next sort of point is going to be, if they can reclaim it, it's a while away, but sort of here, we're going to need to change point of control and sort of value area if we sort of trade out down here. Yeah, yeah, the whole market's going up. Look how much NQ is popping. This looks to be a real order. Let's see if they fill this out. It's 60s. It's juicy 500 lot here. You can expect the market to normally fill out these areas. There we go. Let's see. There we go. Nice fill out. And that's why MBO is important, right? When someone lays out 500 contracts there, you better believe the market's going to go towards it. Seeks out liquidity. Well, that's the play, Pikey boy. We're planning, if we put this into a composite profile, we can see we've kind of got a bit of double distribution. We're going to fill out here, and we'll maybe work our way back into evens here. Sort of plan. Oh, they pull it. Sneaky, sneaky James. Normally I have to see a big push like that in so much size and it just whoosh right through with some stops happening. That would have personally probably been my target from there. I mean, it's aggressive to hold it all the way back up to initial balance here. Extension. What resources do I recommend? The playlist in the description, mate. If you spend some time watching the playlist with that, well, you need to make sure you've got a decent platform so you can see the stuff. But if you watch this playlist, it will set you right, dude. Lumen, how's it going, mate? No, exactly. What one was that? Is that James? Is that the spaghetti junction diagram? Yeah, I'm glad you liked it. It took me a while to put that together. That diagram is like my brain. Do you know the monkey with the symbols? You know when it does that? It's like my brain. So, Kieran, basically work your way through that playlist. Make sure you've got a decent enough platform to spot things. Um, if you are going to be a big fan of Bookmap, make sure you sort the thresholds out because it can be very misleading without sorting the thresholds. Um, learn the depth of market, work your way through that playlist, and I think that playlist is will definitely put you in the right stead. Try and go into it with an open mind as well. Nice, nice. I'll need to actually sort of some watch some of these videos. I've spent so many hours in all this stuff that I need to remember which one exactly was which. Um, but yeah, the why traders lose and journaling. Also, if you don't have a journal, there's a link in the description to one. It's free for like I don't know 2 weeks or something, where you can just export your trades. You can do it with meta traders and you know futures options. You can do it in everything, and then you import your trades. The reason why I'm suggesting that is if you're too lazy like me to write down everything in a Google Sheet or spreadsheet, that is your friend. You export from your order routing platform, you import it, and you basically write down and run through all your notes, and then do a weekly review. Then it allows you to see, what hours you make money, which days you make money, what your max adverse and max favorable excursion is, which is extremely important numbers. If you're not journaling, I actually think it's probably one of the most important things in trading. Rather than spending more time in front of the charts trying to click buttons to make money, if you set a fixed time window, execute it, and the rest of the time spend on your journal. The journal is like, your behavior when you're in a trade. Because if you don't do that, you suffer from recency bias, which everyone does this. You take three losing trades, you can't remember what trade you took 2 months ago, and you're always going to suffer from the most recent pain that you go through. So, Motive Wave. So, yeah, Motive Wave is good if you're on Mac. Um, yeah, but by all means, there's if you join the Discord, I think there's a couple of resources in there for footprint stuff. Um, but generally speaking, mate, footprints, you're just going to be looking at stacked imbalances with footprints because the trouble is, with footprints, if you're using the current candle, we'll call it, or within there, it can change. So you always need to wait till the candle closes for footprint, in my opinion, because it can currently show an imbalance and then it changes. So they work much better to spot stacked imbalances when price is revisiting those areas, if that makes sense. Good question, Lumen. I would say if you're trading CFDs, of course using the futures product for that. So if you're trading US 100s, looking at NQ would help. If you're trading US 500s, then looking at ES would help. If you're trading any forex pairs, euro dollar or cable, you can look at 6E for euro dollar, and you can look at 6B for pound dollar. Uh, Not if you're trading any of the wacky miners or exotic crosses or anything. And again, if you're trading oil or gold, then of course they have their own products. CL is oil and GC is gold. You can do that. And typically CFDs or FX, of course, they have spread and commissions. You pay spread in the trade and out of the trade, whereas in futures you don't pay any spread. So kind of slightly different vehicles, but almost the same thing. Um, so yeah, just take that how you will. The one thing I would say is you need to be pretty quick with it. To be honest, like um, how to explain this? So if you are looking to stay in the forex game and you are looking to use some of this order flow, watch the futures product and then potentially execute on your phone or something. Like you only use your phone to buy and sell, for example. It's hard to jump between charts and stuff. Well, the thing is, Pike, if you just export them, that's the main thing. I took too many trades today, to be honest. I think I took something like 13 trades, which is too many. Too many today. Pike. Exactly. Trading view is like something I check when I'm on the train or something. When I'm traveling. I can never imagine executing on that platform. But it doesn't even have tick data, to be honest. Could you kind of explain us your chart configurations for ES 5-minute chart, the cumulative delta, market profile, which is the TPO, the blue and yellow round areas are big trades. Yep, the bubbles are big trades, greater than 200s per executed in one clip is the bubbles. And the below chart is daily TPO. Yes, so this is daily TPO. This is the current whole session that you're seeing. Each we'll call it like column, right? Is 30 minutes that you're seeing. And this is VWAP. This is volume weighted average price, which is the average volume price for the session. Pretty self-explanatory. The white lines are the standard deviation bands for the VWAP. Very typically, without any other context, VWAP, when price gets extremely out of whack, it normally likes to revert back into the mean, typically. But would I take any trades off this? No. I would like to see it in confluence with something else. Yeah, I think so. Or maybe if you've got a couple of monitors, man, then yeah, no problem. Have your execution platform on there and carry it that way. But you need to have a good platform so you can see stuff. It all depends on your style of trading as well. Yeah, Kieran. So the futures market has a lot of volume that goes through it for forex. for euro dollar and cable, which is probably the two most traded ones. There is dollar CAD as well, and there is the yen, all against the dollar. But any of your sort of weird and wonderful crosses, like I know what would we call it, pound versus New Zealand dollar or pound versus Australian dollar, for example, they're not a thing in futures. These crosses. Now, majority of forex is done OTC, done over the counter. And it is a decentralized market as well. So it's kind of the same as crypto, you know. In crypto, you've got Binance, uh, Kraken, Hit BTC. I don't know how you pronounce that Asian one, Huobi or something. I'm probably butchering that. Coinbase, and all of which have their own volume on Bitcoin and Ethereum, and you need to have a software that aggregates that together. You're just not going to get that in Forex, to be honest. So this is the whole point of a centralized book, meaning everyone sees the same thing, barring latency and stuff. Clint, how's it going, dude? No, this is a study that comes with Sierra. It's called Large Volume Indicator. I have a video about it if you want to see the heat map. Um, for the stream, I have just the bubbles. I don't have the complete heat map because it's quite taxing on the PC, and it's hard to do that plus of multiple DOMs and stream. Um, there's a video. It's configure heat map. If you look at it on the channel, dudes, it will show you how to set it all up. You can have a look at it. Yeah. So the bubbles are basically trades that are executed in one clip. One clip. It's not combined. Quite right, mate. It's really expensive. Really expensive. You don't really need the volume dots either, to be honest with you. So that's all the stuff I've got in the channel is completely standard with Sierra. It's not any paid indicators or whatever. I've actually tried some of them in the past and they look visually slightly nicer, but they're not worth the money, to be honest with you. Sierra eventually will release features eventually, that's more aligned with the bookmap. But if you want to basically have a bookmap, copycat, there's a video on that where I detail all of it. You just need to make sure that you download the depth data. You need to make sure you've got level 2, of course, whoever your data provider is. And that's pretty much it, dude. Set your thresholds for the minimum and maximum shown, but all that's run through in the video. Yeah, I think that chap is pretty cheap. I think it's like $4 a month or something. So if you don't want to go through all the faff of setting it up, you can do it that way. I actually think it's quite good though, so you learn Sierra and you actually know what's behind the stuff on the chart. I think it's probably good if you do it yourself. Build your own. Probably take you a couple hours, mate, but it's worth it in the long run. Everything that you see here I've built myself. So I can quickly go in and edit it and change things all the time. If you just take a template, you're not going to know that. Yeah, exactly. Right, James. Yeah, Lumen, you're telling me, mate. I would say for learning the DOM, Jigsaw is quite expensive though. Jigsaw's Jigsaw um Jigsaw's good out the box. I don't know what price it is, to be honest. I've never really checked. I think it's quite expensive. I think you need to buy the package. I could be wrong though. Could be wrong. But Sierra is like seriously, it's a learning curve. Like I'm not going to sit here and say it's not. It's an extremely complicated platform. But yeah, I completely agree. Well, once you start using Sierra, it's so customizable. It's crazy. And weirdly, I find it quite therapeutic to build stuff on it. Like, can you imagine starting with nothing and then you end up with something like this? You can imagine how many hours of my life that took. What if the situation escalates now in August in the UK and Europe, so the Fed won't cut rates but hike? No, they're going to have to cut. Categorically, they have to cut. But basically, at the moment, um, unemployment is increasing. There's not as many jobs been added as expected, considering it's in the summer months, and typically summer months you have a spike in jobs added because of summer jobs. Um, and the longer they keep rates higher to basically curb inflation, the more pain people go through because their credit card payments, car payments, mortgage payments, everything is up in price. So I reckon they need to cut. It's probably going to be the question by how much. I think they'll maybe cut 50 basis points. The market is kind of pricing in 125 basis points. What's going to be interesting is the revised numbers that come out for those NFP reports. That's going to be interesting because the first one that comes out when it's revised, typically it's completely different. Do you use MBO data? Patachi, yes I do, dude. This MBO data you're seeing here, let me mark it for you, mate. This is MBO here. Now this is the ghost algo, so ignore that, but this is an order. You're seeing it at 60. You can see over here is an order, here's an order, here's an order, but it's moving here. So yep, MBO is good when it's good. These ghost algos that have come in are kind of throwing everyone off at the moment, but it works really well in treasuries. Exactly, James. Exactly. So you have Ninja. Is it good enough, or change it to Sierra? So, Ninja, by all means, for just regular charting. I think they use TPO and stuff on there. Like TPO and volume profile is nothing special. Like you get that in pretty much every charting platform, except from TradingView, but they've got the worst TPO I've ever seen. But anyways, um, it's the depth of market that is not great. I think Ninja has like that super dom that is absolute garbage. I mean, I don't know if I'm. What is that? Is that Ninja? I think it is. Where you hover over the DOM to place a limit order and it freezes the DOM. What a terrible idea. Who could? Clearly, the developer that made that doesn't even trade. When you hover over the DOM to place an order, it freezes the DOM. I mean, that surely can be turned off, right? What a terrible feature. Well, work. I've got a lot of tutorials, mate, on the channel as well. There's a Sierra Charts tutorial where you can work your way through it. It'll get you in the right direction. I highly advocate, rather than just taking templates, to actually spend the time doing it. You want to be really familiar with the platform that you're with and understand it well, so that you know what's going behind the studies, so you understand everything in the chart, and it allows you to just have a better comprehension of your platform. As the USA, large millions of dollars worth of commercial real estate portfolios or large housing portfolios are not profitable anymore because of the interest rates. Well, I think, to be honest, mate, that all these portfolios a lot of the time are refinance deals, and then they're geared towards the rent portfolio anyway. And normally they're buying them cheap enough, and then they'll buy them with one company, do them up, then refinance it with the special purpose vehicle that simply um, does the mortgages, and then they'll get the cash out, and then they just simply gear it towards people paying rent. The trouble comes when people default on rents. That's when it gets difficult. Because realistically, if they drop interest rates and they drop them enough, people will just refinance again. Typically how it works. They'll maybe be on a couple of years fixed. And commercial real estate, they have to put more down as well. They're probably talking, I don't know, 25% or something in the US to put down. Yeah, exactly. It would really depend. I think at least there's not the CDO problem that we've got before. An interesting stat, if you wanted to check that, we would check the delinquency reports or defaults across the board. But pretty much the majority of America, I think by the stats, is in pretty deep in credit card debt. And I think the US gives each individual a lot more credit than any other country, to be honest. Fortune, no problem, dude. Have a good evening, buddy boy. I don't know if you guys have got any other questions. We're just kind of faffing around here, not really any real action. We have 30 minutes till the volume comes in. Well, we have specifically, see if I can count, 18 minutes till the volume starts to come in. We have the market on close data. Is anyone in any open positions? So let's see if we just grind our way higher. What a sell off again today. This has been long on gold. Yeah, Brian, buddy boy. Oh, it's on demo. What do you think about Mr. Buffet? selling lots of the stock. I think he's quite right. I think he's quite right. When the market goes into a cutting cycle like this, you kind of want to be net long bonds. And he's saying he's liquidating his stock. He's basically just taking profits though. That's the thing. That's all he's done. He's took profits and basically put it into bonds because the market is getting into a cutting cycle and basically a correction is happening in equities. Very simply, because the market's been held up by the Mag 7 stocks. Yeah, I think so, James. I think now that we've filled in Friday's single prints, I'm hoping the rest of this week we go bid. So I need to make sure and take my analysis and ram up my ass if that doesn't happen though. So I just need to trade what you see on a day. But now that we've filled out those singles, I suspect we'll probably grind our way higher now. Yeah, exactly. Look at this action. 5, 10, 15 minutes doing absolutely nothing. Clearly, wait, nothing is going to happen until this data comes out. What do you mean my DOM show absorption better? What are you using? Let's reset the delta actually, so you can see it a little bit easier. I've got a whole video about how to build this DOM. See if you take out that 50, they do. Slowly working our way up. Slowly but surely. Everything is going up, pretty much printing the high on the DOM anyway. We'll recenter. Let's get rid of these lines. I see ICT streaming at the moment. It'd be funny to see what he says when the market on close data comes out. Oh, I've just turned on the algo. uh, God. Well, of course he does, mate. I mean, he owns a massive part of these companies, And he's not really trading, to be honest. This is firm Berkshire Hathaway is doing it. So he's got an absolute slew of people that execute all this. Probably some of the best analysts in the world. But he's not a. Do you know what I mean? He's a prime example of holding large positions and is a big fund, but doesn't have the complex ways to execute those positions. He's there to basically, or when I say he, I mean his firm is there to basically move the money around and you know return a positive return for their own firm, for their own bonuses and their shareholders. But that doesn't necessarily mean that they execute the orders themselves. They will probably phone the large investment banks to execute them on their behalf. Because he's it's not like someone in that firm just goes in and starts drilling thousands of shares into Apple. Do you know what I mean? Like that's not how they do it. What they'll do, and this is where, I mean, it's almost insider trading, to be honest with you, but they'll phone a large investment bank and they'll say, right, we want to sell millions and millions of pounds or dollars worth of the stock. Give me your best price. And then they'll quote them a price, and then basically the firm that does that then needs to start offloading that, and they'll quote them a price that basically makes them money, so they need to start working the book to get out that order. And to liquidate that amount of size, they'll probably do that over days, to be honest. Do you know what I mean? Days. That's what I'm thinking as well. Yeah, exactly. And equities is a completely different beast because they're getting different quotes from different exchanges as well. So you know, it's equities is different, whereas at least futures is at least one quote price. But that's exactly how they'll do it. You know, and very much it will be. I'm simplifying this a lot, but they'll have a risk team, they'll have an execution team, they'll have a sales team. Do you know what I mean? There's a lot more departments, but I'm just simplifying this. Where large firm phones the salesperson, the salesperson closes the deal. That then goes to the risk team. The risk team oversees the exposure for that position, and then it goes to the execution team. And I can guarantee you that if Berkshire Hathaway phones Goldman and says we need to dump, 500 million of stock, the next morning there is a conference meeting and everyone that is there in that play works out a strategy how to liquidate that position. And you better believe when they're doing that, they need to start working the book, because this is the thing, they cannot just go in and sell. Do you know what I mean? Because you'll literally tank the market. You need to start being creative, buying it up a little, breaking some highs, selling more, advertising prices, doing things, trying to sell continuously throughout the day. Because if you just go and dump that in the market, you'll literally probably tank it like 10%, probably more. Do you know what I mean? So that's the whole point of order flow, is it gets you thinking that way. How crazy is the VIX been as well? Madness. What are you saying? You're saying 5200. definitely been interesting. Um, with the setup, I think the market's definitely calmed down the last few days. It could have been a lot worse. But the trouble is, it's really not out of the woods. When you see this, look at if we zoom out, this was the Friday close. Then Monday, we in essence sold off overnight, so created this gap, right? This is Monday session. Tuesday, the sort of panic was off, but we did then sell off towards the end of the session, basically taking back all these gains. Overnight session went bid. We've now filled the gap again, and now we're selling off back to the lows. So if we do take out this level, and then the absolute, throw the paper in the air, the world is going to break, help me, is down here. Like if this breaks down here again and sells off aggressively, like it's more news time. Do you know what I mean? The S&P is on terrible gains. If you watched any media outlets that was not Bloomberg, they basically all said that ES and NQ had an absolutely shocking day on Monday, right? But then you see though it only closed like 2% down. It was down like, I don't know, 5% or something, give or take, on the day, and I think it closed something like 1.5% down. But the media doesn't say that, of course. They just make out as if the world's going to blow up. So now we're just going to trading this out. We could, of course, like James was saying, we could now just trade all this out. Basically, be interesting to see what the COT report is going to be like and open interest. But it would make sense. We're going to need to see the Mag 7s perform in order for this to go bid and basically clear this extreme high volume node here. The Mag 7s are going to need to perform. Unless the Fed comes out and extremely cuts rates, uh, I don't know. I just don't think cutting rates is going to help the market like this. The reason being is it's just been so driven by the Mag 7s that if you took them out of the equation, the market would be at the floor anyway. So you're just seeing some profit taking and liquidating. Yeah, yeah. The yen hike carry trade sort of leaning off a bit. James, no, I've not got the. That's crazy. Even more so if you're trading VIX options. My gosh, balls of steel. Let's reset this. So most likely we're just going to trade this. We'll see if market on close is going to start coming out here. So get your Doritos and snacks out. We've got 2 minutes till we see the initial hit. Now, let's get the Tom Brady playbook out here. What are we thinking? So upside, we have a potential bid up to VWAP, sweep here, and then sort of fill out this range. We have a sweep down here of the low. Let me get my rectangle out again. God, we're rectangling all over the shop at the minute, aren't we? So we have a sweep below previous day low, and then do it quite aggressively, and then bid back up and sort of take the POC to here. Um, yeah. What's the contract difference? So highest node here, we're talking like 7.5k. What kind of volume is POC like? Jesus, this is miles away. 8, is that it? Okay, so POC is definitely going to shift down here. Let me recenter. Yeah, so this is basically going to be the new point of control down here. Um, so we may see price go up, revert back to this sort of higher volume node down here, or do it this side and then sweep. We need to see how aggressive it is. Vote sweep of 520. So you're saying down here, dude, right? Yeah. So I'm thinking down here, previous day low, sweep that, and then work our way back up. We'll see how to do it. And Delta though, I mean, where we're looking at Delta, nothing is really happening. So it's not like the book is extremely, well, saying that, we did go from 8,000 up to here to like 13, but it's been a really slow grind. So I'm not really expecting too much here, to be honest. We could in essence just chop around here. See if it's enough juice. Um, it could even be as lackluster as, like, seriously, it could be like sweep here and then return back in. Yeah, exactly, James. That's what I'm thinking. I'd like to see an absolute dump and sweep previous day low for some action, and then or work our way back up to 50s. That would be great. Because a lot of these positions, of course, you have had, like 7-8k delta to get us there. That's just liquidating now. We'll see how it plays out. Is anyone checking it out, the market on close data? See how many billions it is net long or short, or buy or sell. Let's clear all this. Okay, so let's draw out that low. Was it 5200, right? I don't think we're getting there. I've already got it drawn out. I just don't think we're going to get there. I don't think there's enough juice in it. I'd like to see it, but I don't think there's enough juice. Yeah, it's really just a reason to get the volume in, isn't it? Let's see if sellers take this 500. Interesting. If this doesn't get filled now, then it will be filled. Let's see if they pull it. That 500 lot is 100% going to get filled when the data comes out in 7 minutes. So it close. The way the market's going to not take out 500 lot. I mean, if it does pull, then c'est la vie. Yeah, pretty lackluster. We'll see. Are you guys taking any positions on this, or just eagerly watching? Just watching, nice one. Okay, let's see the 500 lot is going to bang through it. Here we go. There we go. There's no danger the market is not filling out a 500 lot sitting like that. There's a lot of selling coming in now. Here we go. This could be enough to take us down, potentially. Wow. They're hitting it. Okay, watch the absorption below here. Let's see the amount of absorption step in now. Here we go. Action. Just absolutely snapped it right. They're going to fill out this 820 here, surely. Pull it out, push a little bit lower, then reverse back up. You can see tons there. It's a huge negative 951, but that was taking out the 500 lot. Okay, now let's see. We need to spot the absorption that's happening. They're continually layering their way down, so they're not done just yet till they stop layering. Right down to 5220 here. We want to see someone really step up and hit it. Oh, this is if they do not run this back, that this could be bad for sellers if they continually bang this. But most likely, surely we do it by a tick. Don't literally hit it by missing a tick. That'd be grim. They know that all this selling, they can basically start getting out down here, but they've literally just missed it by a tick. Brutal. Still got, gosh, 3 minutes left till this data comes in. Yeah, I mean, you're definitely going to bang it through here, right? And then see if you can start getting out down here. Data comes out in 3 minutes, bang it back up. Start lifting the offers, tons of selling, it's just come in here as well. It's literally a sea of red. It's dumping. I just don't think on today that we're going to absolutely obliterate this. I think this is a fantastic sweep now that we were saying to then reverse back up. It's just a little bit disappointing that they don't do it. They miss it by a tick, which I still think they'll hit. Someone's not really completely stepped in just yet to absorb. It's been over 4 or 5 ticks down here, not a huge amount. Yeah, let's see if they can hit it through here. I mean, if they create this and don't ram it back into value, this is going to be curtains. But I think most likely though that we do run it back up to 40/50s, to be honest. There's a ton of buying that's just come in as well. But yet the offers just absorbed all that buying that's just happened. This is attempt 3 for the low. Yeah, here we go. All these orders are going to get filled here, and then work our way up. Here we go. Let's bang it all the way back up now. Look at the amount of buying that's just come in. Wow. This market does not look at all great, does it? Like if these they're so fragile, the market at the minute. Nice juicy 1k lot there. I think that could be us. We may grind our way higher now. 1k lot's gone, so no reason to go back down anymore. Yeah, exactly. Exactly. Oh, the 1k lot's back. Let's see if tomorrow's data that comes out, if we can hit this tomorrow. Hopefully we don't have a continual bid in the overnight session. It's been doing that. Here's a link for any of you lovely people that want to support the channel. Two options: you can do it via the coffee, or you can do it on YouTube. Whatever is your easiest preference. There's no way they're going to leave this 1k lot there, is there? You know, in terms of like overnight or anything. So I think once it gets too far away from price again, it'll probably just pull. I think it's almost there just to say, hey, we've got some strength down here, let's just grind our way up. It'd be wild if we take that out at this time. Let me know if you guys have got any questions. Yeah, I'm not pre-market is me going bids the most though. I mean, this is the thing. You have all these like the market goes extremely bid, and then it's broke yesterday's close, and then if we end down here, the market then goes bid overnight and does the same again. But eventually, if this does give, I mean, this is a really important point in the market, to be honest. These levels right now, because if they give way and some more selling does come in, the market is in essence in free fall below here, to be honest. Yeah, well, there's a slew of data tomorrow. Friday's session. I know, what a week of volatility. Do you know it's actually really good for everyone? If you manage to survive this week, right? Because I can tell you the amount of traders that have probably, lost their lot this week is going to be a lot of people. So if you can work your way through these types of, market regimes with extreme volatility and VIX at 40, you can, you've got some longevity in the game. No problem, Jamesy boy. Thanks very much, dudes. Let me know if you other people have got any questions. Look at the amount of buying it's coming in as well. Crazy. Delta has actually hit a high on the session, and yet we're basically at the lows. Crazy. Shows you how strong the offer has been today. Offer be gobble gobble. I'm going to quickly see here how. Let me just actually bring it up. Trading view. We will go to. I just want to see how the market finished across the board. Did we sell off in? Wow, we did. Did we finish that low down? Wait, really? Let me just quickly change this. Candle. No, we didn't. No. Okay. Trading view always makes it seem worse as it is. This is my time, so it's 6 o'clock. Yeah, this come in, then we actually sold off again. Really? Wow. Okay. And then we're just going bid, so we're ending pretty much the day. Regular trading hours is flat on the 10s. Let's have a look at the yield curve. We'll change this to line. Okay, so what you're looking at here, let's put it to an hour so it's not as... Okay, so yield curve wise, this is the 30-year yield. Let me... Things annoying. Dot. That's even more annoying. Arrow. There we go. Okay, so the 30-year, which you expect to get the highest, is at the highest, which is great. You're currently still getting a higher yield on the 2-year than you are for the 5. So this inverted curve, it's starting to correct itself a little bit, which is great because look what it's like when it's up here. This is extremely bad. That you're getting more than the 30-year if you're buying a 2-year note, which is crazy. So it's sort of sorting itself out, but in essence, this chart and needs to. Well, let me zoom out and we'll go left, back to when life was meant to be normal. Power up your plan. Great. Can't even go. Maybe go to the daily. I'll show you what I mean. Wow, that's crazy when I saw that. Okay. So this is the way it should be, right? This is the way it should be. The 2-year, then the 5, then the 10, then the 30. Okay, that's the way it should be. Now, if we go back here to 2008, right? Wait to see this behavior. So we'll scroll back. This is 2007. Now you can see the behavior for the crash where this was becoming inverted over here before it. It's not been like this since 2006, 2007, and it's been even worse recently. Does that make sense? It basically means that there's no faith in the short term. And of course we had the absolute crazy crash that happened 2008. You might be thinking, why am I showing you this? Well, this is inverse to the futures market. So if the 30-year yield moves up, then ZB, or the 30-year bond, goes down. If the 5-year yield moves up, ZF moves down, right? So you can see this is crazy here for the 2-year up here. Get rid of these lines. So that's kind of where the economy's at. They need to basically sort this, or it could be curtains, to be honest. Yeah, exactly. If it would break now, let me see if it does actually. Yeah, they're just gonna grind their way back into value. They're just doing it slowly. So let's have a look at how's the FTSE doing these days. I don't really check this market. Let's go to candle. Okay, FTSE. This is the daily. See, do you notice the difference? Look at the FTSE versus like the S&P. It's just such a mean reverting market. Do you know what I mean? The FTSE is a fantastic sweep market as well. You know, it doesn't have these crazy gains. You know, we look at this. For a whole year, it's basically done nothing. Same here. It kind of went up here from 2021 to 2022. But these years does really nothing. It's not really did anything here. We have broke the highs, but then we're now retracing. So the FTSE is a completely different market, even though it's an index in its own right. It's the top 100 stocks in the UK. Then you have the absolutely wild DAX, so the top 30 in Germany. Eurostox 50 is the CAM one. I actually think the FTSE and Eurostox would be better assets to trade than the DAX. Sorry, than ES. Yeah, so let's have a look at actually crypto. What's happening with that? Ethereum's dumping. Yeah, this has not been the best crypto bull run so far. I wouldn't even call it a bull run. I've not really been checking too many alts, but it's not like they're all absolutely mooning. Okay, so daily time frame. Where are we? Okay, so we went from 30k, basically mooned, now ranging, kind of toying with death here to crash. You know, did something on a DAX, they tend to wait as much as they could until they make the move. Bitcoin just had a sweep of the channel low. Yeah, I see that. Look at that for a sweep, man. That is aggressive, right? That's like sweeps on steroids. I mean, what percentage is that? Is that? Let's see. From here to here. Is it? Wait, what? Am I seeing that right? Is that how much that's moved today? I mean, I know Bitcoin's volatile, but that's a 7.5% sweep. Yeah, that is crazy. So we're saying that today that was down over 10%. Am I right on that? Or is this potatoing? This is the daily chart, right? Oh, I'm gonna have to click this again. So from today, wow. So today that was down 15%. Holy smokes. So yeah, I never ever look at the Nikkei. Let me add it. Nikkei. What's the yeah? It'll be CFD. What's the CFD for that? If I go to mm, here. Nikkei 225 cash CFD. There we go. That'll do. Wait, why did that not? What's this? It's MoneyGram. Okay. Add to watch list. Let's try again. I want to see what that's like. Nikkei. You're kidding me, TradingView. I need to pay you to have more than 30. Is that a joke? Right, let's get rid of this. Delete. Is that right? Okay. And they're the same. Okay. And let's drag this up here. Down. Okay. This has been absolutely wild, hasn't it? Jesus. We actually had a limit down, and then a limit up, didn't we? If I remember correctly. This was Monday, Tuesday, Wednesday. So we had a what was that as a move on the Nikkei? That's wild. 12%, and then we had a limit up move as well, which kind of ended in nothing. I got it here. Call my friends to start buying shit coins. Nice. Let's have a look at the dollar. So you can expect the dollar, without looking at this chart, right, you'd expect the dollar to be down on a cutting cycle. The dollar prefers higher rates. Typically, obviously yields prefer higher rates. The bond market does not. The dollar does not. Stocks don't like higher rates, they typically prefer cheaper money. Just as the general sentiment idea. Let's have a look at this carry trade. Wow, that's just been absolutely unwinding, hasn't it? So start of the year, how do we get one of these vertical line things? How do you do that on here? Vertical line. Right, and then start of the year, January. Right, might as well just draw it here. Okay, so this is start of the year. Wow. What a carry trade this year, right? Jan 24, held for the year, now it's just unwinding. We're now basically back to the start of the year. Sunday. I can't believe that move in Bitcoin. It's madness. Let's have a look at Ethereum. Ethereum's just doing the same, right? What a buy that's been. That's certainly a sweep and a half, isn't it? 100%. So look at gold. Typically in the markets like this, you're going to again be expecting gold to be going down because more people are putting money into bonds that they get a higher yield for versus gold. And that's why gold is going down. Oil, what's happened? What, 3% in oil? Wow. Well, gold is. This has been a great level. See this level here. This is like something textbook stuff. What a sweep here that is. God, I wish I was watching this market. That's a sweep and a half. Key level, market drops below it, closes back above, just absolutely rips all the shorts they now cover, and then we have a great day like that. Wow. And it goes aggressively into the level as well. That doesn't get much better than that. Yeah. We'll see. If we look at the Bund, it's the German 10-year, which is having a slight pullback. It's went bid as well. Look at the Ultra Bond. Ultra Bond gets smashed. Why is this line here? Ah, right. Let's get rid of that. So Ultra Bond, we did the same here. A nice little sweep. This level. I'm not joking. I remember taking this trade. I literally ticked out of the low. Big, do you remember I took that trade? I literally took this trade and ticked the low. Oh, no way. Look at that. That's crazy. Oh, gosh. That's a cracker, that. Pound yen doing the same. Yeah, that's pretty much it. Let's add in Euro stocks 50. I can't. I need to take away one. What will I take off? Let me take off pound yen, and then we'll add in Euro stocks. Stocks 50. What's the ticker for this in CFD land? So I don't need to. It's there. Stocks 50. That'll do. We'll put that beside the DAX. Yep. Wow. Sell off in Euro stocks as well. This market's much thicker. It's obviously going to be thinner probably slightly now, but this is a much thicker market back when what ES used to be like, so I've been told. Actually, yeah, I should have been like all in or zero. It's nice to actually see the market like this. You know, you've got fixed income, you've got cash, you've got European equities, UK equities, Asia. Then you've got oil and gold, and of course the fixed income. You've got some majors in there along with the dollar. You've got some crypto. Swiss franc's getting rammed as well. Cable's flat. See euro dollar today. Is that it? Euro dollars did absolutely nothing today. Let me know if you guys have got any other questions, or we'll look to wind it up. Okay, everyone, I hope you guys have a fantastic evening. If you've not yet joined the Discord, I think all you guys will be. Jump in. Hope everyone has a great evening. See what tomorrow brings. Valentino. Good question. Okay, we'll quickly run through that for you, mate. It's kind of easier to see this when the market's not moving. Let me go to Treasuries a second for you. Open. Let me jump into this a second. Okay. So, what balance day in Treasuries now, eh? Okay, well, we're here because it's slower and it's easier to explain. Right. So you need to be watching both the inside prints, right? So what's currently been traded into the bid, what's currently been traded into the ask. Okay? As prices trade in, these front 2 or 3 ticks will move. Okay? So they've just taken out the full amount there, reloaded the offer. Okay? And what you need to be paying attention to is when they're ticking into the next price, how many orders here is cancelling. Okay, that's what you need to be checking all the time. Not also on the first tick, what's happening on the ones below. This is where this comes in handy. So you get to see what's been pulled and stacked. And very typically, when the bid is pulled, right, this 1500, they'll trade into it, okay, and then, more will cancel. Okay, so you notice 75 traded in there, 500 pulled, then they've added it on again. There's trading 600 in here, so you want to see if they lift into this, how many trades did they pull some off. These are the types of idea that you want to be using. So very typically, if you're coming into a level, right, and say they pull back, you need to sort of be anticipating yourself that how strong is the bid below here if you're looking to sell, right? And you can then gauge how these have been pulled. This happens in every market, it's not just treasuries. The only reason we're doing this in treasuries is because it's easier for you to see. It's slower. I cover this on the DOM treasuries video in the playlist. It's all covered in there as well. Thank you for your time. No problem, Dynamite. What is it? Is it plummeting? Oh. Well, I don't think it's gonna happen this session, but we'll see. So yeah, pulling bids and offers is part of trading. It's always been there. It's just harder to spot in a thinner market because by the time you blink, they've pulled the bids and offers. Anyways, guys, I hope you all have a great evening, and we'll catch up on tomorrow's stream. If you've got any questions, feel free to reach out. And you guys all have a fantastic evening, and everyone take care. Peace, everyone.